welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets take a breather owing to lack of cues. The Nifty trades above the 10,350 mark. Dabur swings in trade after its second quarter misses analyst estimates. Dr. Reddy's surpasses street estimates in the second quarter. However, sales from North America report a decline. Axis Bank is the top Nifty gainer today on back of an Economic Times report suggesting that Bain Capital is looking to invest up to $1 billion in the lender. And Bharti Airtel and JSW Steel are some of the other key earnings slated to come out today.
Well, the headline said it all. In fact, if you pull up the indices, a bit muted, led predominantly lower. What's happening to heavyweights like Infosys and State Bank of India and PSU banks in particular. But the heat map will give you a proper depiction. It will be Axis Bank on one side, and I would presume State Bank of India or Infosys or one of those others at the other end. Okay, it's UPL, but just look at the list of losers. There is a fair bit of red on the screen with some heavyweights like Infosys, State Bank of India, to an extent Ultratech, Cement, which are all facing some pressure. But the one at the top end of the screen, which is Axis Bank, is up 8.5%, doing really well for itself. So that's the highlight. I think there's some bit of a bounce that we're seeing in the oil and gas names yet again. So ONGC continues to rise and shine. BPCL marginally in the green. So those two or three names are doing rather well for themselves. I just want to mark two things. One is the advance decline ratio, just show you the market breadth. I would presume that the advances have just inched forward a little bit. Yes, somewhere around midday, they inched forward. And even for now, while they're converging, the green line is still above the red line, which is a good thing. So that is one. And two, the contributors list should come up on your screen. And you would see the pressure that maybe PSU banks and financials like other HDFC Bank and SBI are putting on the bourses. Negated again by select performances by Axis Bank, predominantly Axis Bank really. If you look at the difference between the losers and the gainers, is this 19-point contribution that Axis Bank is making. Had it not been for that report, I think it would have been touch and go between the losing side and the gaining side. But no such problems on the broader end of the spectrum, Pradeep. More gainers than losers yet again. I mean, at least on the noticeable front, more gainers than losers.
I think only gainers actually, if you want to look at the kind of volume that is backing the price movement, it's definitely on the buying side or only on the buying side. There could be one or two exceptions here and there. HEG and Graphite to start with, both these stocks have once again started moving up after a roadshow and some of the positive reports that these companies came out with. And in fact, HEG has also mentioned that because of certain measures taken by the Chinese government, they are looking at a few more strong months going ahead. And interestingly, that is the reason which is driving a few more stocks in trade, like, for example, Balaji Mines that came out with the strong numbers. The management has again given credit to the pollution control measures taken by the Chinese government, and that's why this stock is moving up 17% in today's trade. Good numbers backing Bharat Electronics as well, and Zen Technology, a small cap stock that moved up on a strong order flow. In fact, interestingly, the order that they have received recently, and that is actually driving the market up. The order was reported yesterday evening only. Surprised that the stock is up only 6%, because what this order has done is it has tripled the total order book position that the company has got. But interestingly, there has been some profit booking at higher levels. You also had Reliance Communications, interestingly, moving up and not down. GMR, GVK to infrastructure stocks doing well, and also Precall has moved up ahead of auto numbers that will be expected tomorrow. So these are some of these stocks, as I said, mostly gainers. Navneet.
It's looking like a stock-specific market. It's a muted day of trade. In fact, the Nifty's also had a range-bound session. It is somewhere consolidating around that mark of 10,350. Let's take a look then as to what the trends in the futures and options market are indicating. As we said, there is some sort of consolidation around the 10,350 mark. In fact, if you look at Bank Nifty also, which throughout the day has managed to trade above the 25,000 mark, and that's precisely got to do with one stock, and that's Axis Bank, which has single-handedly driven the Nifty Private Banking Index and even the Bank Nifty. Axis Bank, as you can see, those are the futures. The underlying is up almost 8%, and some fresh long positions have been seen post that news of Bain Capital looking to invest some money in the bank. But in terms of what the options data is suggesting, if you were to ask me what could be the trading range this week, look at the 10,300 put strike. That's added maximum open interest so far of about closer to 3 lakh shares. Even the 10,200 put strike actually has added about 4 lakh shares. On the call side, what is active is the 10,400 and even the 10,500 strike. If I were to look at the premium on the call as well as the put side of 10,300 strike, it's giving a range of almost 10,200 on the downside to about 10,475 on the upside. That could be your trading range for the coming week as well. Well, also, we've spoken about Axis Bank, but in terms of stock futures, I just want to highlight 3 stocks. Now, these 3 stocks are the ones where a maximum open interest concentration addition has been seen, and rather all these stocks have been trading at 52-week high. Pull up the futures of Bharat Electronics, NIT Tech, and also MRPL. These 3 stocks have added open interest. MRPL open interest up nearly 16%. You've got NIT Tech as well, where a lot of open interest addition has been seen in today's trade, and all these 3 counters so far has added around, seen some sort of fresh long positions coming about so far in trade. So those were a couple of the active stock futures so far which we've seen in today's trading session. But net, if you look at sector wise also, Nifty PSU banking index, which was pretty active yesterday, has lost its steam today. That index is down almost 2%. The realty index, pull up that's your top sectoral gainers so far, and what is gaining there are the likes of DLF. You've also got stocks like Phoenix Limited, that's up almost 3.5%. Oberoi Realty, Prestige are the stocks which are up. And in fact, if I'm not mistaken, Pradeep, Nifty Realty was up yesterday as well.
Yeah, but if you look at it today, there is some amount of profit booking in across segments, other than a few stocks as far as heavyweights are concerned. Even across segments, if you look at it, the action is more in the mid cap than in large cap. So it looks like traders are active only on the smaller side or the broader market rather than in the index. Maybe there is if you look at it, the overall range for Nifty or Bank Nifty, probably as soon as we move inch up towards the higher end of that range, and you always determine it on the basis of FNO. So it looks like when we move towards 10,400, there is some selling that starts. Right. Equally above 25,000, there is selling that comes in into the banking stocks in Nifty Bank as well.
Right, and I missed out on a very important point. India VIX has been trading in the green since yesterday. It was up almost 6%. Today also, it's up almost 2.5%. That's just telling you, just a word of caution. There could be some sort of correction coming about. But moving ahead, United Spirits reported strong second quarter. Net profit and margins both saw an expansion. While to discuss the quarter gone by, Anand Kripalu, MD and CEO at the company, joins us on the show. And also joining in is our research analyst, Agam Vakil. Agam, over to you.
Thanks for joining us, Mr. Kripalu. I want to start off with your overall revenues, and that's been aided by Prestige and Above segment, which has seen a growth of as much as 10%. My question was to do with, considering the fact that we've also seen your popular segment coming under strain. What I want to know was that how would you see your growth going into double digits in the medium term, considering all these aspects and especially challenges with respect to the popular segment?
Well, this growth will come from having a stronger growth on Prestige and Above. So really getting Prestige and Above to be even stronger than just 10%. And making sure that Popular delivers modest growth, which may be just, a couple of percent. And really the aggregate of that, with Prestige and Above being 2/3 of our business now, the aggregate of that will come to double-digit growth. So that's our plan.
Well, if you consider the Popular segment, is the slackness in growth more to do with the industry itself? And that said, what can be done to revive sales in this particular area?
So the performance of Popular is industry-centric. So we don't believe that we have lost market share in any of the states. And a few particular states have had very sharply challenged performance. And that's because in those states, there has been very, very significant price increases in the last 6 to 9 months. And as you'd understand, the popular segment is the most price sensitive of the lot. Equally, those states have been most impacted by the Supreme Court ban. And therefore, just the points of purchase and the points of consumption have reduced very, very sharply. So when you combine the price increase and limited access because of the Supreme Court ban, these two have caused popular to be challenged. Now, as we look ahead, the pricing change is stabilizing, right? And companies are beginning to spend a bit more so as to drive volume, and the Supreme Court ban is slowly receding. So I do expect that as we look ahead, Popular will look more respectable than it's looked in the previous quarter.
Just request you to stay on for just 1 minute, and Agam request you to stay on as well. But two key results, two mid-cap names that have come out with the results. IDBI Bank, it's a horror show of sorts. The NPAs have expanded. More importantly, the losses have widened, and the stock is duly reacting 4.5% down. So it's not a great quarter by any stretch of imagination. The losses have just widened considerably. On the flip, so this is IDBI Bank. Just look at those numbers. I think the NPAs have expanded. Net loss has doubled.
So one number, if I may mention,
Sure.
is gross NPA as percentage has become 25% now. This was 24.1 in last quarter. So QOQ NPAs have actually gone up.
Yeah, 100 odd bips, and yeah, the net NPA, almost everything that can go worse has gone worse in the quarter. Whether that improves or remains to be seen. I think management will talk at some point of time, and we'll talk to them as well. So that stock is seeing some pressure. Not good news for PSU banks, which are already under pressure. And Inox Leisure, on the other hand, the numbers expected were very muted. The stock has come out with, but the company's come out with a much better set of numbers, at least on the bottom line, and duly reacting about 4% in trade. So just a couple of numbers that we wanted to mark. But Agam, yeah, take it forward.
Sure. So, Mr. Kripalu, I wanted to come back to you on your capital expenditure plan, and you said that, and you indicated that you intend to use about 150 to 200 crores for this financial year. Can you tell us about how you're going to use these funds, and if you could give us an update on your current capacities as well as a potential addition in production as well?
Well, so if you look at input costs, is it higher than the previous year? Yes, it's higher than the previous year. The question is it lower than general inflation? Yes, it is. Is it more benign than we had originally forecast? Yes, it is. And therefore, it has given us, obviously, short-term benefits. Now, as far as the outlook on commodity is concerned, it's very hard to predict longer term what's going to happen to commodities. And in India, commodities are not linked to global prices like crude and so on. It's linked to more closer to home things like the monsoon. But I do feel that the immediate future, the commodity environment is okay, right? I'm not too concerned about the short-term commodity environment, but it's very hard to say what's going to happen next year.
All right, and so finally, a word on your capacities and if we can see any addition in production.
So our basic philosophy has been to consolidate our manufacturing footprint, and we have been doing that slowly and steadily, and improving utilization in our existing plants. Our capex goes towards ensuring that we continuously upgrade our facilities. Bring in more automation, raise the standards for health and safety, reduce water consumption and energy. So, some of our capex goes towards that. And some of our capex goes towards brownfield expansion, which is expanding existing sites that we believe are part of our destination manufacturing footprint. So those are really the uses of capex, apart from which we're also looking at how we can upgrade our IT systems so that we can not just be in pace with what's happening in this whole space, but even be a step ahead.
Mr. Kripalu, thank you for joining us, and with that, it's back to you guys in the studio.
Well, thanks a lot for that, Agam. So that's, of course, the key management. I mean, the stock that has been on a roar the last few days, post its numbers at least in Friday. Okay, some more numbers, I think, if I'm not wrong. Capital First too has come out with numbers. Welspun Enterprises, 17 crores versus a 6 crore loss. That's an interesting set of numbers. Pull up the intraday of Welspun, and I think it's a fairly interesting quarter that they've come out with. No, Welspun Enterprises, this is Welspun India, which is a different stock, but Welspun Enterprises, it's correcting actually. Net profit versus a loss. I don't know if the expectations were much higher, but that's doing okay. In the meanwhile, SBI Life has come out with numbers. The net premium income. I must say, after Bajaj, Finserv and ICICI, the numbers weren't the best. This is not a bad quarter put up by SBI Life. The first quarter post numbers, post listing, excuse me, and that's not doing too bad. And I think we have a management with us as well. Shashank Sinha, who's the managing director of Stride Shasun, joins us to talk about their numbers too. So let's first go across to Stride Shasun. Mr. Sinha, thanks so much for taking the time out and being with us. What would you make of the quarter gone by? Would quarter 3 and quarter 4 show a better picture than what you've done in quarter 2, Mr. Sinha?
Thank you. So, as we have commented, we are pleased overall that our business has rebounded quite strongly in quarter 2. This is mainly driven by a very strong growth in regulated markets. We launched 2 successful new products in the US market, which we had talked about in the previous quarter. We also had good growth in the Australian business, where our distribution and our market share has increased. So overall, the quality of growth has been very good. We have rebounded quite strongly in the emerging markets as well. Good growth in Africa brands. Good recovery in India post GST. Overall, on the revenue side, we've had 20% quarter-on-quarter growth, which has been very good. The impact of the new products in this quarter was only for about a month, because we got approval only in September. So rather than talking about forward-looking numbers or indications, I'll broadly say that in the third quarter, obviously these new products will have their full impact through the entire quarter. And as our revenue momentum picks up further and the operating leverage kicks in, we do expect good results in the second half of the year.
Operationally, it will look much better than what it has. I mean, I'm not asking you for specific numbers on the PAT or revenue or anything, but I think revenues weren't a disappointment as much as the bottom line numbers were. Your revenues were much better than what we were working with. But I think the EBITDA numbers, the bottom line numbers and the margin numbers left a bit to be desired, Mr. Sinha.
That's the operating leverage that I'm talking about. So certainly, we are looking at an improvement in the operating leverage in the coming quarters.
Mr. Sinha, how are the trends with regard to pricing, since the entire industry has been reeling under the pricing pressure that the pharma sector has been facing? How was the quarter for you in terms of pricing?
On pricing, we have quite a different story in terms of the US market. We are growing off a small base in the US market, and all of our growth is new sales, because as I said, it's essentially around new product launches. So we don't have a large legacy portfolio, which is and where the level of competition is really creating the steep pricing pressure in the rest of the market. Since ours is a new business, we haven't experienced the pricing pressure. Plus, remember that we have always indicated to the fact that we want to be in limited competition, high entry barrier categories. So many of the categories and many of the products that we have launched or that we are in, we are maybe the only Indian generic player. For example, in omega-3, we are the only Indian generic player. Or in one of our other big products, which is a vitamin product, algocalciferol, we are the only Indian player, right? Potassium citrate, which we have launched, we are only one. There is only one other Indian generic player. So, we are in limited competition categories, and that has defended us quite well in the US market. We have not seen anything out of line. The impact of the overall pricing on our portfolio has been, the same as before, which is kind of mid-single digit.
And how does your pipeline really look in US market?
The pipeline is strong. We have 27 or 28 ANDA applications pending for approval. Almost the entire pipeline has been filed under these new time-bound GDUFA guidelines, where approvals are given within 12 months. So all of that should materialize in the 12 months. Plus, we are continuing our filing momentum. So if you look at what we have indicated in the past, we'll be filing between 15 and 20 new product applications during this year, which again will be out of the approval pipe within 12 months from now. So the new product pace is only going to become stronger as our approval momentum and filing momentum picks up.
Okay. I think one question on key approvals that are expected the next couple of quarters, and also I think KKR has already confirmed that they are working with you on a deal involving Innova Pharma in Australia. What's the update thereof? So 2 updates that if you can share with us.
Look, as I mentioned earlier, I can't comment on the portfolio which is still under approval. So I won't be, specifically talking about any specific product. I did say to you that we have 28 E&D applications pending. If you look at the composition of that, almost 50% or more than 50% of that portfolio is actually low competition. So there are modified releases, there are soft gel capsules, there are other topical products. So all of that is more than 14, 15 of these 27, 28 are actually very, very defensible, because we'll be one of the very few players in that market. More than that, I'm not allowed to comment. On Innova, I mean, that's old news, honestly. That transaction has, Innova has already been acquired by a consortium in Australia. And, so I won't comment on what happened in the past.
Okay, fair call. I think the key that we are driving from this interaction is that your numbers, your operating level will come back in the second half, and that will help you improve the margins in a big way, maybe as soon as Q3 itself. Thanks a lot, Mr. Sinha, for joining in today and giving us that perspective. That's Stride Shasun with their thoughts. Clearly, not to perturb, they cited revenue growth looking okay, and they hope that the margin picture will start improving going ahead.
Let's have a look at Cyient. There has been a huge block deal here. 1.11 crore shares changed hands. That is 9.9% of equity actually at 525. So stock has dipped because of that huge block deal. 10%, close to 10% is the total size actually.
Oh, that's huge. 538 for this one. But yeah, okay, that's a very large block deal that have happened. Just trying to figure out who it could be, which could have done this deal. We'll get some details going there. But while we're waiting for all of that, Raymond Moses, founder of moneyworksforme.com, joins us right now on the show. Raymond, thanks so much for taking the time out and joining us. Just looking at the markets, the PSU Bank unraveling continues to happen, dragging the Nifty Bank and maybe the index along with it. What are you guys thinking about this whole thing that has happened? Because the Nifty PSU Bank Index, clearly one of the top losers today as well.
Yeah, it may be for today, but we are really, looking at the long term when it comes to investing, and we have a very different take when it comes to the next 3 to 5 year perspective on the same sector. I think we need to look at the fact that there is a lot more transparency on the NPAs now. Information which was perhaps only available to a few is now widely available. And that itself has a very positive impact in terms of how you analyze such stocks. Then in the light of the recent bank recapitalization and other infra project announcements, we are a lot more positive today than we were perhaps a week ago.
Okay. Capital First numbers on the screen. I think, if I'm not wrong, the bottom line numbers are better than estimates. I don't know if Navneet has picked up anything else, but just the bottom line numbers at 78 crores versus our estimates of 75 crores. The stock is perking up a bit. Remember, okay, let's also look at the revenue numbers and then the asset quality issues, because this is a model which is strictly comparable to Bajaj Finance. And Bajaj Finance numbers left a little bit to be desired, though the commentary was fairly optimistic. Capital First, let's just wait and watch if indeed they managed to spring a surprise or not. The revenue number, or the bottom line numbers, certainly look fairly impressive. 880 crores is the revenue number as well. And I would presume that too is probably slightly, but we'll just wait and see if the asset quality is, any other details coming in on the asset quality, On the looks of it, these numbers look okay. Any thought here, Raymond, on models like Capital First, Bajaj Finance and some of the others?
See, I think when it comes to private NBFCs, we find them pretty much expensive. So our take on that is that current prices, they look far more expensive, and maybe the return expectations in the future could be lesser than what we would expect. So we find them expensive. As compared to that, we see some of the good names in the PSU banks benefiting from what has happened, and looks like the prices will move to a zone which is quite attractive.
Since you're saying you like PSU banking space post the development which has come in the form of bank recapitalization, any particular stock in the PSU banking space where you are bullish on?
You refrain from talking on specific stocks, but I can tell you the top names are definitely attractive. SBI, Bank of Baroda, Indian Bank. We've been tracking and recommending them at different points of time in the past. Even early 2016, we were looking at the prices and seeing them to be attractive for long-term investment.
Okay. Let's. I think we've got Raymond Moses on a slightly difficult line. We'll just try and reconnect that at some point of time in the show. But Raymond, if not, thanks a lot for joining. We'll just try and see if we can repatch that line to get more clarity on this conversation, because right now it's just becoming slightly difficult. Okay, moving on and talking about the Fab 4 stocks, because I tell you, while, as Pradeep was saying, while the large caps may not be doing too well, the mid caps are dotted with gains. So Yash Upadhyay has fished through the whole list and gotten us the Fab 4. Yash, good afternoon.
Good afternoon, Neeraj. So first of all, we have Bharat Electronics. The stock has hit a record high of 192.40 on the NSE today, gaining as much as 9.5% after the company reported a strong set of Q2 numbers. Top line and bottom line both saw a significant improvement on a year-on-year basis. Moving forward, we have Network 18 on our radar. The stock is up almost 6% after 90 lakh shares on nearly 0.9% shareholding in the company exchanged hands via multiple block deals today. Also, we have Zen Technology on our radar. The stock is up almost 6%, but it had gained close to 12% intraday, hitting a fresh 52-week high in the process after the company said that it had received one of its largest domestic orders of rupees 224 crores from the government of India. So good news there. And lastly, rounding off the Fab 4, we have Axis Bank on our radar. The stock has gained close to 8% on the back of ET reporting that private equity firm Bain Capital is likely to invest $1 billion in the company. So good news there for Axis Bank as well.
All right, Yash, thanks a lot for bringing the Fab 4 stocks of the day. But let me just highlight a couple of more stocks from the broader markets which are doing well. 8K Miles is the one which is up almost 17% right now. Let's just pull up the intraday chart of 8K Miles. There you go. It's trading almost at day's high. Besides that, you also got IL&FS Engineering. That's also risen almost 15%. And other stocks like Kiri Industries, a stock like Monte Carlo, that's seen in buying interest actually in today's trade. It's seen gains of about 11% so far. That's Monte Carlo there on your screen, trading around those levels of almost 540, Pradeep.
Well, so these are some of these stocks actually doing well. If you look at some other movers over the last few minutes, I see a lot of volume picking up at Tata Steel counter, and it's also recovering. It's still down, but it was down 2.5% when I saw it last. See, there's some amount of recovery in Tata Steel happening. Axis Bank continues to gain more volume. Bharti Airtel, this is another stock. These are some of the heavyweights where I've spotted recent action. Bharti Airtel is again trying to recover. So let's see if they can really push the indices up.
That, and then I thought I spotted two stocks, quite frankly, guys. One of them is Sanghi Industries, which is up, I think, 6% at 132. Cement has not put a wrong foot this quarter, and this one is no different, now trading at life highs. The other one is India Glycols, which is doing really well for itself. Big move yet again in India Glycols, should come up on your screen. Up 17%, 3.5 million shares traded on this one. So really good going. And Balaji Mines, can't really forget that interaction today. The stock was up 17%, I think, midway through trade, still up about 16.5%. The management commentary was okay. I mean, they didn't really think that, or they didn't really spell it out, that the kind of performance that they've had this quarter is something that is sustainable for even the next 12 months, because China remains a big threat and any policy change thereof could alter the space. But Balaji Mines is up and active. The management which was actually more confident is Zentech, and that stock has come off, but it did have a 15% rally in trade yesterday, so you give it credit there. But after that rally, and after starting off about 12% higher, Zentech did come off. Though I must say it's off the lows of the day as well. Went down to as low as just a 4% uptick, currently at about 6%. Again, the volumes are giveaway, about 2.5 million shares traded on Zentech too. So good
the
going.
order is really huge for them, their order book has kind of tripled, and they hope to kind of start showing some of these numbers starting next year itself. I thought the reaction would be, much more bullish, and the stock will try and hold. But as you mentioned, probably we should look at it from the weekly perspective and see how much it has really gained, and then the profit booking is probably justifiable.
Yeah, good going there. Okay. Let's try and get you some more voices really just before we get in our technical experts on the show. But as markets are hovering around those record high levels, Edelweiss as a house has been advising its clients to exit segments that have turned frothy. In a conversation with us earlier today, Nishchal Maheshwari spoke about sectors that offer good opportunities for profit booking. Let's listen in.
This is a good time to take away some profits from the market. Definitely I think some of the sector where there is a good amount of froth, basically we are recommending our clients to take away profits there. Having said that, I think what I think it at this point of time, basically to sit on cash, it's a sort of a dangerous thing, given that your performance is continuously monitored. So one should be looking out for investment ideas, and there are quite a few. We have been telling to take away some profit from metals, some profit from the NBFC space. These are some of the sectors basically which we have been asking. Some of the mid caps also basically which have gone ahead much than the valuations and the on a time frame basis.
All right, that's the view coming from Edelweiss. Let's just look at a couple of the stocks which are also there in the futures and options market. Sun TV is the one. This counter was active in yesterday's trade as well. And there has been some sort of follow-on buying which has come in for Sun TV today as well. It's off day's high, but still holding the gains of almost 2.5%. On the future side, only 4% OI buildup has been seen so far, but the stock was active yesterday as well. Besides that, you've got Titan. Now, this is the counter which was up almost 5% in yesterday's trade. So once again, there has been follow-on buying which has come in for Titan. The stock's trading around levels of 630. Remember, the 52-week high is at about 654 for Titan. So it's inching very closer to that mark. Titan today is trading with gains of about almost 2%. And what has rebounded today is HCL Technologies, a counter which was down for 5 straight sessions, is one of the gainers on Nifty. HCL Tech is currently trading almost at day's high with gains of 19 points there, up over 2%. And from the same pack, you've also got TCS sitting with marginal gains. However, it is a heavy weight on Nifty, so that's also contributing. But TCS is also almost trading at day's high. Well, on that note, let's get across a management. Welspun Enterprises reports a 17 crore profit in the second quarter versus a 7 crore loss which was seen in the corresponding quarter last year. Markets, however, seems unimpressed. The stock has fallen over 1%, but let's decode the numbers with Sandeep Garg, Managing Director at Welspun Enterprises. Hi Sandeep, good afternoon. Thanks a lot for joining us today on Bloomberg Quint. Could you take us through the highlights of the quarter?
Thank you. The highlights of the quarter is that we have a year-on-year growth of the revenue on a consolidated basis of 260% and an EBITDA increase of about 436%. On a standalone basis, the revenue, which is 170 crores, is about 224% 8% higher than the on a year-on-year basis, and similarly the EBITDA is about 839% higher. The EBITDA margins on a standalone basis have been about 20% of the revenue, which is a good sign. We have an operational efficiency. In terms of our balance sheet, the balance sheet stays strong. We have about 950 crores of cash and cash equivalent on the balance sheet with relatively zero debt on a standalone basis. So overall, the business seems to be in the right space. We have an order backlog of about 3,500 crores. The business at a macro level is looking up. There is a lot of business being announced by the Government of India in the road sector. So we seem to be in the right industry at this point in time. And the company is doing operationally a reasonably good job. We are executing a Delhi-Meerut Expressway, which is the major project which is contributing to the revenue at this stage. We have completed about 70% of the project in 11 months, whereas the scheduled completion as per the NHAI is about 30 months. So we are well ahead of schedule and hoping to make some bonus as well on the project.
What would you be L1 in, if I can use that term, because as you mentioned, you are in the right project. If any of the recent announcements from the government side are to be believed, then one pocket to be in is probably this whole infrastructure construction area. What would you be L1 in? What's your estimate of how much further can this improvement go on to over the course of the next 2 or 4 quarters? Because this quarter, your numbers are looking certainly impressive.
We expect going forward the revenues to continue to grow. We started from a small base, so our growth is going to continue. We expect that in this year our turnover would be in the ranges of 1,200 crores or there around, and we expect a year-on-year growth of about 30%. In terms of the order win ratio, we have a reasonably good record. We bid only for limited projects. Our win bid ratio would be in the ranges of 15%, which is a good ratio in our industry. Given that we would be bidding for about 20,000 odd crores of projects, we expect some order to come through about 5,000 crores in the next year.
All right. Just last question, Sandeep. As you said, you will be bidding for projects for 20,000 crore. But could you give us an update? You just said there is an order backlog of over 300 crore. Correct me if I got the number right or not. What's the status there?
We have order backlog of about 3,500 crores. The status is we are expecting 2 of the projects to get their appointed date in the next 30 days or so, which will start to generate revenue. The third project, namely Anta Samaria, has been awarded to us in the month of October. We expect the project to go on stream or the appointed date to take place in the middle of December, and that which should also start contributing to the revenue in the Q4.
All right, Sandeep, thanks a lot. We'll leave it at that note. Appreciate you joining us and decoding the quarter gone by with us. And the stock is not too enthused with good set of numbers. Actually, it looks like there is some sort of profit booking, because if you look at the stock on YTD basis, it's up almost 170%. So good quarter for the company. Probably what you're seeing on the screen today is a bit got to do with profit booking. Well, on that note, markets are still where they were. Nifty at 10,340 right now. Let's just get you the technical check. Pritesh Mehta, Head of Technical Research at IIFL Wealth, joins us now. Hi Pritesh, good afternoon. What's the call on Nifty and Bank Nifty, and specifically Bank Nifty today throughout the session has comfortably maintained the 25,000 mark. Do you see the all-time high levels which everybody has been waiting on Bank Nifty to come by this week?
Good afternoon. See, let me first talk on Nifty index first. After a big rally, market will always go into hold. It will always face supply pressure at high levels. That is what we have witnessed in last 4 trading sessions. In fact, if you look at the high-low movement of last 4 trading sessions, the range is getting narrow and smaller. Previous Thursday, the high-low difference was around 80 odd points. Yesterday it was 41 points, and today is roughly around 45 points. It tells us that the market is lacking the momentum it had in last 2 weeks. Private banks are not doing anything. In fact, they are not the leaders in the markets anymore. And also, if you look at the index heavyweights in last 3 to 4 trading sessions, they are not performing the way they were in last couple of weeks back. So I believe this market is in search of momentum. They are in search of leadership sectors to take the markets higher. During this time, it is quite obvious for markets to go through period of consolidation or retracement on a downside. Also, if you look at the GAN number 10401, this is the 4-digit GAN number on the Nifty, and market has made a higher on these levels and came back lower. So I believe that with the presence of this important number, the market could go in the process of retracement or sideways correction in next couple of days. During this period, I think we should be focusing on stock specific ideas rather than focusing more on the movement of the index. And coming back to the question of on Bank Nifty, I think regarding Bank Nifty, private banks have been the main underperformer. Because for first 7-8 months of 2017, it was all private bank show. But from last 2 weeks, 3 weeks, in fact, if you look at the ratio chart of private bank against the Nifty index, they are showing signs of topping out. In fact, we have not seen a strong outperformance from any of these banks in last couple of weeks, barring the performance of ICICI Bank. But I feel that there is a strong change of sector leadership going on right now in the market, and private banks are no longer in picture. As long as they continue to underperform, I believe this all-time high figure of Bank Nifty would be difficult to achieve.
And what are your top trading ideas for today?
So first recommendation is buy on DLF. See, we don't normally recommend these stocks from this space because they, on most of the occasions, they flatter to deceive. But I'm putting my neck on the line and giving a buy on DLF. To term it in terms of rationale, this stock has given a breakout from a downward sloping trend line on the weekly chart. Now this trend line was in place since May 2017. It has finally given a breakout. Second point is that if you look at the realty index, Nifty realty index, it has surpassed the peak of July 2014. Now it has given this breakout of 4 years underperformance. Third point is that if you look at the ratio chart of Nifty reality index against the Nifty index, it is telling us that the index has given a breakout from a flag pattern. Now flags are generally continuation pattern in nature, so I'm expecting a strong up move coming in from the real estate stocks, and DLF being the leader in this space, I believe the strong up move is likely to take place in the next couple of days. It's already up by 6% today's trade. I'm expecting more to come, to buy for a target of 212.
Okay. Well, if you have had a look at Gujarat Alkali's chart, Pritesh, what's your view there? The stock has moved up around 4-5% in last 1 hour of trade itself.
Yes, I think it is all about now chasing stocks, because just in last couple of days back, mid cap index and the small cap index, they came into uncharted territory after a long period of underperformance. So I believe that there will be pockets of strength emerging from the small cap, mid cap size, and Gujarat Alkali, the stock is making new high, and we are in an environment where market is going to reward stocks which are doing well, and Gujarat Alkali is the one stock which we have to chase. I think I'll maintain a stop of 710 and buy this counter, and we can see a level of 820, 830 next couple of days.
Okay, Pritesh, stay on. So much more to talk about. But let's get in a quick thought or perspective from the management of Symphony as well. They've posted a 19% jump in PAT. More importantly, I think the highlight is the EBITDA margins seem to have been restored to the earlier levels. As I read, the EBITDA margins are at about 34.8%. The Executive Director, Rupesh Shah, joins us right now on the show. Rupesh, good having you. Thanks for joining in. So correct me if I'm wrong, Rupesh. There were two predictions of sorts that you made in your last call to us as well as in the annual note. One was that operationally the numbers will start looking better, and will be restored to the earlier levels, which you have really successfully reached. But the sales numbers were a bit disappointing. Was it because of the extended monsoon, and will that correct itself in the current quarter?
So as far as sales is concerned, for the quarter, we have achieved top line of about 184 crore versus 130 crore for a June quarter. So on Q2Q, the sales growth is more than 50%, while on YOY, that is September 16 was 150 crore and now it is 184 crore. So on YOY, the top line growth is about 22%. Now, this sales growth needs to be viewed in line with summer of 2017 for air cooler industry was a pathetic summer. Most of the peers and competitors are sitting on huge inventory, not only those competitors, but also their trade channel. While in our case, we have achieved normal top line growth in line with our estimate given, that is 20-25%. Coupled with that, as far as profitability ratio is concerned, which was about 20-22% in June quarter, now we are back to 34%. So I believe that our performance is reasonably good considering totality. And this is despite the fact that GST has been introduced with effect from 1st July, despite the fact that there have been some initial hiccups.
No, I completely agree. I mean, which is why I started off the interaction, Rupesh, saying that, EBITDA performance has been rather comforting after what happened in the previous quarter and the quarter before that. Okay, so tell us, one is, where have the sales come from? Is it, and how is the institutional segment looking like? And how is this quarter shaping up to be?
Sales is mainly from domestic sales, including organized retailers as well as traditional retail channel, and it is across the geographies. Secondly, it is the new models which have been also received very well. That is the high-tech range of models having gesture control and Insta Chiller, also the diamond range of models, and on top of it, as it was conveyed earlier, our iTouch range of model where we had launched at introductory price, the pricing is back to normal. So one is the pricing power, and second is our volume growth is in line with the value growth.
Rupesh, not only the EBITDA margins, actually the gross margins too have improved during the quarter. For the month, it's 53.2 versus 51.8, which was seen in the corresponding quarter as well. So definitely there have been attempts to minimize the cost pressures as well. What I also want to know, Rupesh, is since GST was implemented and you guys are the leaders in the air cooler segment of almost 50%, correct me if I'm wrong, because of GST implementation, did you see any sort of shift in from the unorganized to organized market, and have you benefited from it, or that benefit is still pending? Do you see it coming in the coming quarters?
No, we really expect the benefit to accrue to organized sector in the days to come, because unorganized sector, many of them were evading the taxes. But we will really come to know the extent of benefit and shift in the peak season, that is in the March quarter and more so in June quarter. But considering the initial feedback and the response, I believe that even unorganized retailers are also moving to compliance mode, and hence it will be healthy for the organized sector.
If you try and look at the details of your margin, if you look at the cost structure, interestingly, your on a quarter-on-quarter basis, the employee cost has gone up by 40%, whereas advertising expenses have fallen by 90%. If you could put these into perspective, and it would be easier for analysts to kind of forecast how the margins would look like going forward.
Frankly speaking, in our kind of business, it can't be compared Q to Q. A better comparison is YOY, and that too YTD. As far as advertisement and sales promotion expenses are concerned, we need to spend during peak season when customers really buy the goods. And the peak season for air cooler is March quarter and June quarter, when really end sales takes place. As far as September quarter and December quarters are concerned, it is the trade which leaves the inventory, of course, with 100% advance. And hence, we need not to spend much in these 2 quarters, which are relatively off-season for the customer perspective.
Okay. Nupesh, final question from my end at least. I think in the annual report as well, which I have in my hand right now, you guys mentioned about how the last quarter was but an exception. The quarters ahead will see the return of normalcy. Now, normalcy in the recent past was a 25% growth rate, which you guys used to forecast and beat it comfortably. Is now the new normal 20-odd%, or would you believe FY18 could see a 25% growth, top line, bottom line over FY17, and whether those numbers can be reenacted FY19, FY20 as well?
Our medium to long term growth estimate is in the range of top line growth is 20-25%, but it is certainly on a CAGR basis. It is not for a quarter or not for a year. Because in our kind of industry, there may be a quarter or two, there may be a year or two in which there may be abnormal growth or there may be lower growth also. So on a CAGR basis over a period of 3 to 5 years, our estimated range is 20-25% and maintaining current level of profitability margin.
So, Rupesh, will the second half be better for the company?
I think as of now, we have reasonable visibility of December quarter. So December quarter seems to be good. As far as March quarter is concerned, it's also partly dependent upon weather god. So for March quarter, it's too early to forecast anything. But very importantly, I wish to highlight it, even though it has not been asked. See, in our kind of business, we have really adopted the capital light, asset light, working capital light business model. And hence, during the quarter, our capital employed in the main segment, that is the air cooler business, was negative capital employed. And hence, in a way, the PBIT % on the capital employed was infinite. And as far as for 6 months are concerned, the capital employed was minuscule, which translated into 4-digit % return on capital employed. I think that's a noteworthy performance, which I wish to highlight.
All right. Thanks a lot, Rupesh. Thanks for joining us today, and congratulations on good set of number. That was the management of Symphony. The numbers compared to June quarter were definitely better, but some impact of GST seen there, and clearly highlighting that in quarters to come by, probably there could be that shift from the unorganized to organized market, which the management mentioned. They see the benefit coming in the peak season. Probably in the March quarter, you could see some increase in the market share with regard to the air cooler segment. Well, that was the management of Symphony. Overall,
it'll be interesting, Navneet, Pradeep, to see what happens to almost all the consumer companies. So Whirlpool numbers came out, I thought decent numbers, some disappointments here and there. These guys have come back and restored what they traditionally used to do. At the end of the quarter, it'll be really interesting to see what all the consumer durables do, because this was that one basket wherein one, whether the restocking, destocking phenomenon comes into place, and two, I think Pradeep has been mentioning, probably you also mentioned a couple of times, that the festive season split into 2 months this time around. O&D will have the festive season come the base of demonetization. So it'll be very interesting to see if the O&D quarter turns out to be a much better quarter in terms of percentage growth than what this current quarter, which has not been too bad too, has turned out to be. That's very important.
Some impact of that, the festive season will also be seen in the auto numbers that will come out tomorrow onwards. So we'll talk about that in detail as we move on. But our guests are standing by with us. Pritesh Mehta is still with us. Pritesh, if you look at some of the stocks that have been moving up today, Axis Bank clearly among the top performers. What's your call on this now? Because when all the other banks kind of moved up, this was an underperformer. Now the stock has gone up on a particular news. It's just reacting to it. Will you really enter the stock?
Not yet, because now see, if you look at the recent performance, the stock is up by 700% last 2 trading sessions. But if you go back in time, if you go back in the month of Feb 2017, the stock made a high of 530. the stock is again back at the same level. We have not seen any kind of breakouts or any kind of consolidation, on the upside, on the positive side taking place this counter. So I believe the stock is trying to make, it's trying to make a comeback, but it's too early to take a call on this counter, because what I would be looking out for is a confirmation of a range breakout, and then only I would be comfortable, I would be bullish on this counter. Till that time, I think I would stay away.
So that's the technical call on Axis Bank. It's the top gainer on Nifty today, and in fact, because of Axis Bank, we've seen Bank Nifty as well as the private banking index, because of only this stock single-handedly is contributing to both these indices. Bank Nifty still holding up in green, and the Nifty private banking also holding up. But just let's pull up the PSU banking index. That's seen some deeper cuts coming about. Yep, it's almost at day's low. The Nifty PSU banking index, which rose almost 4% in yesterday's trade in the intraday session. In the second half, once again there was that profit booking move which came about. And Pradeep, clearly the PSU banking space is not sustaining the gains. It was just only one day last week that we saw those phenomenal gains coming about 20, 30, 40%, which I know it's you don't get to see on a single day, but looks like now it's more about the implementation which the street is fearing with regard to recap, because no further details have come about how the government is going to allocate the capital, who gets the preference first, and probably all those details, it needs to come out to see exactly who benefits how much.
So it's actually very difficult, to pick up a stock, but it would be interesting to see, the stocks that went up by 100 rupees in a day, when the same stock corrects by 30, 40 rupees, whether or not there is follower buying interest in that counter. So we'll be watching out for what kind of follower buying really emerges over the next few days in stocks like SBI and PNB, etc. Pritesh, what would be the interesting level really in these stocks that will tell you whether or not there is any steam left?
Now see, for PSU Bank Index, we need to first look into the fact that we had a mammoth rally, which we had not seen historically in this kind of movement in this particular index. But there is a concept which we normally talk about, the normal chartists talk about, which is known as tall bar patterns. On the weekly chart, we had the massive tall bar taking place on the PSU Bank Index. Now there is always tendency that the index tend to retrace 50% of this strong move. So the 50% mark is placed around 3600 level. So I feel that there is more decline coming in, possibly of 200 points in this next couple of days PSU Bank Index. From that point onwards, I would rather be, after that, when this correction is done with, I would rather be in the large cap names from the PSU banks, something like SBI, something like Bank of America, something like PNB. These are stocks which we need to keep under radar, because once this selling, this retracement is done with, these stocks will be the first one to rally.
Okay, stay on. So much more to speak about, Pritesh. Just getting ready for some managements. I think Dabur India, which came out with its numbers as well, joins us right now on the show. It's missed the street estimates in the second quarter. Profit growing a muted 1.2%, so it's hardly any growth really. But why is it that this is happening? And could the quarter ahead start looking like, well, the market seems to be pricing that in. But let's find that out from Lalit Malik, who's a CFO at Dabur, joins us right now on the show. Good having you. Thanks so much for joining in. How do you put this quarter into perspective? Is it postponing a potential good times into quarter 3 and quarter 4, or would you reckon that this quarter did show some pressure and it might be difficult to figure out when is it that out of the pressures? I'm only saying that because you missed the street estimates ever so slightly.
Well, I think as far as we look at our quarter 2, we have to keep in mind that this has been the first quarter under GST. And second is that in our international market, there has been impact of steep devaluation in countries like Egypt, Nigeria and Turkey. So we have to factor those elements into account while discussing regarding quarter 2, and therefore what we have seen here in terms of the profit after tax of 1.3% growth is on account of impact that happened both on account of GST as well as exchange, which contributed to lower profit. If you were to neutralize the same, the percentage growth would have been 7.2% growth on the consolidated level.
Yeah. Lalit, since it's the first quarter where GST impact is there, I just want to check Are the trade channels back to normal, or still you are witnessing some sort of disruption? Can we expect that in the second half or not?
Surely. I think what we have seen is that most of the channels like modern trade, institutions, in general trade, distributors and all are completely back into business. There has been some impact that we still see is on account of wholesalers and small sub-stockists, which I think over a period of time will get neutralized, and we should see better performance coming from quarter 3 and quarter 4 onwards, and we should be back to pre-GST normalization level very soon. But right now it is work in progress. Most of the things have normalized, and still there is some more streamline to happen.
The domestic volume growth has come in at about 7%. I believe the street was expecting somewhere around 6 to 7%, and you had given a guidance for FY18 for volume growth to be in that range of 5 to 10%. So far it's been in middle of that. Can we expect the volume growth to be at the higher end in the second half, since all the disruptions now have been factored in the form of GST implementation, and going ahead we're only expecting some form of improvement coming about?
Sure. I think we do expect our volume growth to be mid to high single digit. So therefore, we do maintain our earlier stand of between 5 to 10%, and we would certainly make all our efforts to ensure that it is to reaching within that level and maybe at the higher band of single digit. So that's what we would be expecting in H2 and quarter 3 and quarter 4.
If you look at the breakup of your business, the hair care category, the share of hair care in the overall business is kind of coming down. If you could put that into perspective and give us an idea as to which segments are going to be your key drivers for next quarter.
As far as the next quarter is concerned, we do expect the healthcare sector, considering the seasonality into account, including honey, chyawanprash and all, to do better. Our juice segment is doing very well. Oral care has shown a very good growth of more than 20%. We do expect the growth levels to continue. And also in skin care, we do expect a very reasonable and positive growth to happen. So if you look at among the categories, I think overall we do expect the growth to be healthy going forward, and we also have certain new products in the pipeline which depending upon the market scenarios we will be introducing in the market.
And what is your guidance on margin for next quarter and second half?
As far as margins are concerned, all our efforts will be to maintain and improve the margins. However, I would clarify here that the margin that we see here with the previous year are not exactly comparable, keeping in mind that current one is GST and the last year was under VAT. Though they are not exactly comparable, but in terms of our control on expenditure, all our efforts will be to draw synergies and control our expenditure, at the same time making an effort to improve the margins.
Your oral care category has increased share from 16 to 19%, and if I'm not mistaken, in the last 3 to 4 quarters we've seen the market share actually going up despite of that competition which everybody's been talking about from Patanjali. Are you facing any sort of heat from Patanjali or not?
Well, actually, in view of the Ayurvedic and herbal care preference by the consumer, we are already there in that field for more than 100 years. That is helping us in terms of increasing our market share and increasing our growth percentage. That is reflected in our quarter 2 growth also. So in fact, what we see here is that in view of the competition, we are actually growing, and it is benefiting us in terms of increasing our market share in oral care.
The revenue contribution from the international business has decreased, whereas from the domestic business is going up. Is that a conscious effort by the company? Are you looking to reduce that pie, because your international business for the last few quarters have not been doing that well because of some issues in the Middle East markets?
I think the prime reason in the international market that we see is the exchange. We have seen a steep devaluation in Egypt, Turkey, Nigeria, in fact to the extent of almost 50% in last November, December. So what we see here is the impact of that on the consolidated results, where we see muted growth in the international market arising out of that, which we do expect that it will start getting marginalized from Q3, and it will be fully neutralized by Q4. So we will see the real growth coming up at that point in time. Having said that, there are certain concerns due to geopolitical disturbances in Saudi as well as in Algeria, which is also impacting our top line. But all our efforts are to improve the international share of overall sales, and all our efforts will be to keep on pursuing. As far as SAARC is concerned, it's growing very well, and so the local markets in Egypt, Nigeria and Turkey are also growing very well, and once the exchange gets neutralized and also our overall portfolio gets expanded, we certainly do expect our international share also to grow.
All right. Go ahead, Manoj.
No, thanks a lot for that, Lalit. Thanks for joining in today and giving us that perspective, and all the best for the quarters ahead as well. That's, of course, Lalit Malik of Dabur, speaking about the quarters ahead. Just before we get in our next guest on the show, I want to mark a few stocks, bring up the intraday of Praj Industries. I think it's a strong move that we've had today. Now up close to 10% and counting, back to the levels which Praj used to trade about 9 months earlier, wherein people had started turning bullish on that one. Remember, a slew of things that they were trying to do, not all of them working out, but Praj is doing okay. The one which is on the back of a proposed deal or otherwise, or a rumored deal, is doing well is Inox Wind, up about 11% now. Good going for that one. Avinash Gorakhshekar with his thoughts on the market and specific stocks, and so much to talk about, Avinash. Just a thought on whether the commentary from either Symphony or Inox, or rather Dabur, you were here for both of those interactions, enthused you enough?
Well, I think my guess is 7% volume growth.
This is Dabur we're talking about.
Yeah, Dabur. I think it's definitely decent enough. I think the overall guidance was about 6 to 8%. So I think volume growth has kicked in. But yes, I think in terms of the top line and in terms of the profitability, the markets were also expecting a weak set of numbers. I would believe that yes, I think probably after the third quarter we could see some sort of recovery, in the overall FMCG market. The GST impact would obviously get more neutralized as sales get more or less normalized. But I think clearly Symphony has delivered excellent numbers. I think profits have virtually doubled, and I think here clearly I think the markets would be obviously looking at what kind of earnings traction could possibly come in the forthcoming quarters, because to maintain this kind of growth in the coming quarters, even on a small base, would not be an easy exercise. But yes, numbers have definitely exceeded what the market expected.
Okay, so that is the comment on Dabur. Also, Capital First, if you look at, is now up around 5.5%. So there has been a swing of more than 6% since the results actually came out, and is quoting very close to today's high. Avinash, if you have had a look at this number as well, what's your call?
Well, I think, Pradeep, this stock was battered very badly when the bank recapitalization news came in. But I think the market is very upbeat on the fact that the management continues to be extremely positive. They had hinted that the loan book growth could be more than 35%, and today's Q2 numbers have been very strong. They've come out with a profit after tax of almost 78 crores, where the street was expecting around 75 odd crores. So not only the NI but even the asset quality is very strong. So I would believe that further re-rating could in fact come in even from the current levels.
Let's just pull up the chart of DFM Foods. That's stocks seen good gains, especially just in the last 1 hour or so. Yeah, not only that, I think last 15 to 20 minutes, you've seen those gains coming about for DFM Foods. Avinash, do you track this one?
Yeah, I think numbers have been quite good, here, and I think the markets are happy that within the small cap, FMCG category, this is one company which has actually delivered more on the margins as well as on the top line. So I think as long as the earnings traction continues to be positive, I think you're going to see this company getting further re-rated.
Okay, and let's just get some technical view going for a couple of these stocks which have been active. Pritesh, anything on the charts for Sun TV? The stock's been moving higher since yesterday. What sort of levels should you be watching on the upside there?
I think there's a strong movement possible in next couple of sessions in this counter, because we are talking about a range breakout, and as a trader you need to respect this kind of range breakout, because if you go back in time since 23rd June 2001, so the stock was facing hurdle around 860 odd levels. In today's trade, it's made a first attempt of surpassing this hurdle, and I feel that once 860 is taken out on closing basis, we can see a strong move towards 920. So definitely this stock should be kept on radar from buying purpose.
Okay. Well, any views on Nalco? If you look at the way stock has moved up, I think there's a swing of at least 4% in last half an hour to an hour. Do you see a trade here?
Yeah, for Nalco, I think again we have strong structure in place. First of all, this stock has a long history of underperformance with the metal index, and the stock has not done anything substantial in last couple of months. But again, ever since it broke over 80 levels, it has witnessed a strong buying momentum. Once 97 is taken out, which is an important GAN level, then we can see a strong move towards 104, 105. Definitely, this stock could be bought and maintain a stop of 94.
Well, the top loser now on Nifty is UPL, I believe. Yep, that counter is down almost 3%. Remember, the earnings had come, but looks like the stock's not too enthused with the earnings posted by the company. It's trading now below the 800 mark at levels of about 798. Pritesh, on the charts, the stock's almost at day's low. Would you initiate any sort of fresh shorts at these levels?
We have already seen a drop of 4% since yesterday's trade. I think it would be, I think it would be very late to get into the stock, because the way the stock has collapsed from 840 levels. I think a downside target was seen around 780, and we are very close to that level. So I think we should wait for a while. But one thing is sure, the structure of the stock is going through a strong change. We can see a topping out structure in place. The stock will now face resistance on every rally. 860, 850 would be another great opportunity to create shorts.
Cyient is an interesting stock that kind of crashed, a couple of minutes back. Avinash, if you have had a look at it, when roughly 10% of equity changed hand actually. As of now, we don't know who were the buyers or sellers. Have you been tracking this stock? Any call? Any thoughts on this deal, if at all?
I think, Pradeep, if you see the numbers, I think numbers have been pretty steady and margins have actually improved. And my sense is, I think a 10% change of equity obviously means that some large institutional investors have actually got in. And considering the fact that Cyient operates in very high-tech areas like railways and typically aerospace, I would believe that probably some encouraging news flow once it comes out in the market. Obviously, who the buyers are, I think that would possibly create a little bit of positivity for the stock. But overall, the business continues to be strong. Within the smaller IT names, Cyient definitely looks quite solid, and my sense is the coming 2 quarters should also be good.
Avinash, your 2 top calls are off. One of them is on Capital First. The numbers came just a while back. The profits it's seen a healthy growth of 36%. It's been above what the street was estimating at 78 crores. Would you take us through the rationale as to why you like Capital First?
No, I think my guess is, Navneet, the loan book growth is going to be around 30 to 35%. In fact, the management had earlier given a commentary once the year-end results got over that they would average 20 to 25%. But after the Q1 numbers, they were confident that the growth could accelerate further. And despite the fact that bank recapitalization has been announced, we believe that considering the kind of dominance they have in the MSME and the SME category, I think this is one area where possibly growth numbers are going to improve quarter on quarter, and I think asset quality continues to be extremely robust, below 2%. So all said and done, I think loan book growth, asset quality and ROE are going to get better. So that's the reason we believe that further re-rating could be possible.
And the other idea you like is GNA XL. In fact, the entire auto ancillary sector is buzzing in today's trade. What's the rationale behind GNA XL?
Pradeep, this is a company which actually caters to the tractor and the Class 8 truck market. In fact, we have seen very strong numbers from Escorts today. The tractor market is expected to grow in double digits, and we believe that with a good monsoon, the domestic piece is going to do well. The export market for GNA Axle is primarily dependent on the Class 8 truck market, and this is doing extremely well. So in terms of earnings, in terms of return on equity, we believe that this year could be a very strong year for GNA Axle, and with the kind of expansion lined up by GNA, probably another 20-25% earnings growth for FY19 is possible. So one could look at earnings of around 27-28 for FY19. So all said and done, there's definitely a further kind of re-rating potential here. That's why we got a buy on GNA.
All right, so Avinash is betting on GNA Axles as well as Capital First, but let's also get going some trading strategies from Pritesh. Pritesh, at 3:15 almost, what are your top trading strategies?
I think the one stock which we like to short, that is VEDL. Now see, back in previous weeks, the stock made a fresh move above the previous peak of 334. Thereafter, it made a high of 345, but it fell to certain higher levels, and the stock started reversing. In the process, the stock has also given a break below the previous week's high. I think there's a strong chance of the stock turning into a big breakout failure pattern. It means that the strength which it was displaying in last week's trade would now no longer be seen. So I feel that there is a strong possibility of movement towards 315 on the downside. So I think VEDL could be shorted. And second recommendation is buy on Voltas. Now see, for last 4 months, 3 months, the stock was consolidated at the top. It was knocking on the wall of resistance for last 3 months, and thereafter in today's trade, the stock attempted a break on the upside. This kind of structure need to be addressed as a trader, and I believe that there could be a sharp move of at least 5 to 6% on the upside. Definitely, this stock should be kept on the radar.
Vedanta is the one you want to short, right?
Right.
Okay. So VEDL, as Pritesh he calls it, Vedanta Limited. He has a short call, and Voltas is where Pritesh sees some appreciation here on. So these are two stocks that Pritesh is tracking right now. Pritesh, your call on one more stock before we let you go. Just dial if you have had a look at it. Do you think there is even a trade here?
I think again we have seen a strong movement in last 1 week. We are talking about a 40% up move, but again you have to have a position. You need to have a position when you trade this kind of counter, because they are volatile in nature, and there is a history of strong underperformance. Because if you go back in time, back in March 2017, the stock was trading on 600 levels. From that point onwards, it went to 300. We have seen a sharp depreciation in prices. But I think as a trader, I think we need to be extremely careful not to get into the counter at this level. Wait for a retracement. Something I think there could be a dip towards 430, 425 levels would provide a good cushion to create longs.
All right, second straight day of strong gains coming for Steel. The counter is up almost 5% in today's session as well. Well, it's 3:15. It's time to take a look at what are the dealing rooms recommending. Yatin Mota and Darshan Mehta are here with their channel checks. Yatin, over to you first.
Thanks for that, Navneet. And the first stock is DLF. That is one stock which is moving quite sharply in the real estate pack and on high volume. So dealers are indicating that based on F&O trends, they are expecting further 4 to 5% trading upside, and that is the reason why a lot of positive traction in the counter. Also, watch out for GMR Infrastructure. That is one stock wherein HNIs have been talking about some kind of a corporate action, largely to do with its airport division, which can see some kind of restructuring in terms of unlocking. So dealers are quite positive on this stock as well. And finally, First Source Solutions, they will be reporting the second quarter earnings tomorrow. And the buzz in the dealing rooms is that the earnings could surprise on the upside. But Darshan has more picks for us.
Yeah, so Capital First came out with numbers. It's up almost 5%. Extremely strong set of numbers. A large domestic mutual fund bought shares of the company aggressively after the numbers were announced. So that's what we came to know from dealing rooms. Indiabulls Housing Finance is down almost 1.5–2% last time I checked. It's on road shows with CLSA in Singapore. But there is a buzz of a possible corporate announcement that could come in very, very soon. So that's something that we're hearing on this one. And finally, Bajaj Finserv, again, an M&A deal seems to be brewing, is what dealers are indicating. The buzz is that probably one of the partners, Alliance, is looking to exit, and that's been reported. But a larger, stronger partner is likely to come in. So that's the general buzz that we're hearing on Bajaj Finserv.
Well, thanks, Darshan, for all these details. So Bajaj Finserv is an interesting stock to really track in today's trade. Avinash, what's your view on Reliance Communications? What will really the retail investors now get after it seems that banks are going to become the majority owners and promoter shareholding will in fact fall to nearly a fourth of the total share capital, or half of what they have really at this point of time?
No, I think Pradeep, I think the banks should first find out a buyer to sell these assets, because it's going to be a big process. It's not going to be so easy, because the entire success of this plan hinges on the monetization of those assets. And I think the first plan having failed, I think the markets are not very confident that how quickly this plan would materialize and get executed. As far as the numbers are concerned, I think whenever a company thinks of selling off its assets to actually reduce its debt, that time that the markets definitely don't give it a thumbs up. In fact, this is a time of probably the first point of panic. So I would believe that investors have already lost money, and I think whoever is trading in shares are purely traders. I don't think any fundamental guy is putting his money on Arcom now.
So how does this work? First, the lenders, they convert equity by which they get stake in the company, and then they will look for a buyer.
They will look for a buyer,
and then obviously the buyer will ask for a haircut.
Obviously, they are not going to come in for giving a premium, for those assets. So obviously, it's going to be a painful process for the banks. And most of the PSU banks, Pradeep, are there. You got SBI, you got Bank of Baroda, PNB. So it's going to be a long process. The haircut obviously will be there, and clearly I don't think any of the assets are going to be sold at a premium. So it's going to be a long process, and I would believe that this stock is unlikely to be find any big institutional interest at all.
So in fact, the most important asset that they own is real estate, and the management actually wants to co-develop it. And property development doesn't happen very soon. It's not a matter of quarters, but probably years.
The funny part is, Pradeep, the management, led by Anil Ambani, is now putting its hands up in the air. So clearly, you can understand that this is now going to be like they're leaving the hot potato in the hands of the banks.
Yeah, and whether banks can really get anything out of it, and then will they be in a position to give anything to the shareholders?
The point is if there is any value left in that business to give anything right now. Let's see, but that's a very important point.
But banks also get shares, right?
Yeah,
they
convert their debt into equity here.
So they become 50% shareholders, which means...
But they cannot run the business. They have to find a buyer. So by just acquiring stake also in the company, I don't know how are they going to gain by it. All right. These other, probably a pack which, Avinash, I want to get your view on. Jet Airways has been quite active. The stock was up almost 9% yesterday. Today also, I guess the stock has been trading in the positive territory, almost 2 to 2.5%. And this is despite the crude oil prices surpassing the $60 mark. Any idea what's happening? Is there something brewing just in Jet Airways, or is it sector specific? What's happening there?
No, I think my guess is markets are probably looking for some sort of big corporate announcement from Jet in terms of international tie-up. And my sense is, yes, if crude prices go beyond, say, $60–65 a barrel, it could possibly, depress margins to a little bit. But yes, air traffic growth, Navneet, has been quite strong. My sense is, I think as long as air traffic growth continues to be strong and they are able to actually get the volumes right, they have a large geographical kind of mix, a good airline, mix also. So obviously, this is one company which should not be so badly affected by a sharp rise in crude. And hopefully, if the crude prices remain at the way they are, probably margins and top line growth could come in quite swiftly over the next, say, couple of quarters.
What do you do with IDFC and IDFC Bank now, Avinash?
So I think, Pradeep, clearly, today's news flow has clearly hinted that the deal has not gone through. I would believe that IDFC stands a better chance, because this was one company which was going to become a holding company. And to that extent, I think probably markets are now factoring in the growth that IDFC, which is the holding company, controls a lot of businesses, indirectly. So obviously longer term prospects here continue to be good, but IDFC Bank could possibly be in for a little bit of pressure, because they were going to get a piece of Shriram's retail assets, retail customer base, which is not now going to happen. So IDFC could possibly be looked upon slightly positively, but IDFC Bank could possibly come under pressure.
Now, there are 2 or 3 stocks that I really want to talk about. One of them is Inox Leisure. Much as we thought that these exhibition companies will not have a good quarter, and PVR probably had a mixed quarter, Inox Leisure surprisingly has done well. And I remember traditionally, Avinash, if PVR can't have a good quarter, Inox would definitely end up having a terrible quarter.
Exactly.
It's turned around a bit this time.
Yeah, I think even the numbers which have come in, Neeraj, have given a pleasant positive surprise. My sense is, I think one would like to know, whether, probably, the kind of ticket sales or the kind of F&B sales which they have done. I think whether this is going to be sustained, because this happened in the GST quarter, and most analysts as well as the markets were penciling a slightly lower kind of growth because consumption was going to be hit.
Yeah.
So probably, let's wait for the third and fourth quarter. If these, levels are sustained.
Footfalls were muted. I think they've got this PAT uptake because of lower operating costs, which is what they've done.
Lower operating costs, but the profit growth has been significant. You can't obviously reduce costs to such an extent that the profit multiplies. If you see the YOY growth, that growth has been quite significant. So, cost reduction definitely is a valid point, but beyond that, maybe the third, fourth quarter, if they do maintain the cost, they do require decent amount of footfalls to actually increase the top line.
There haven't been many blockbusters actually.
Not at all.
Played.
Yeah, that is also another value.
No, I have it at the back at my thing. So the toilet was the top performer, interestingly. A lot of marquee movies like Jab Harry Met Sejal and Jaga Jasoos, etc. flopped. So there weren't any big versus Bajrangi Bhaijaan in the corresponding quarter last year.
And the expectation that December would probably be a good time, where some big hits are indeed expected.
Yeah. So well,
the next quarter should be better.
Yeah, Inox has done really well. The other one, and we're seeing this happening now, mid-sized cement companies are really packing in the punch. Birla Corp today is up another 8%. Sanghi is up about 7%. These are regional players, but smaller players. What do you like within this pocket? Don't tell me an India Cement. I'm not buying that.
No, I think...
As in, I'm not buying that argument. I'm not buying any stock. I'm not buying that argument.
No, I think Birla Cement, Birla Corp, I think, Neeraj, my sense is, I think, they have a strong hold in Eastern India where traditionally prices have been very high. And they're now going in for a very large expansion. So obviously, the expansion effect has yet to trickle in, but pricing power as well as some sort of good volume growth has actually propelled Birla Corp numbers. And I think, despite the fact that earlier this was not a strong performer, I think a lot of legal issues were, hackling the company. But now I think I sense that possibly volume growth does come in double digits. And if obviously the expansion also trickles in the second half of FY18, probably you could see a stronger re-rating here, because probably, even from the institutional side, there's been a lot of interest in companies, operating in Eastern India.
Certainly. We'll be joined by the management of Escorts in just moments from now. I don't know if you guys discussed Escorts already, but hey, another great quarter for Escorts. I mean, I remember last month we were talking about M&M tractor numbers, and Rajesh Jejurkar was saying that these numbers are here to stay. We'll actually get to talk to M&M again in a while. But M&M, I thought Escorts numbers were okay. The stock has come off a bit, but the numbers on the EBITDA front seem pretty okay. So
Avinash just referred to it while we were discussing some of the
I think I was just telling him that we are positive on GNA Axle, which actually is a supplier to tractor companies. So, that stock has also moved up, obviously, because today Escorts numbers have been much better than what the street expected. And as Neeraj said, margin improvement at the EBITDA level has been almost 300-350 basis points. So probably volume growth and the operating leverage has kicked in. So that should possibly continue for some few quarters.
But M&M sales data for the current month may not be good. I think most analysts are expecting a degrowth in the volume for October. So that number will also come tomorrow, just for traders.
Because?
Sorry?
I'm just wondering, why would that be the case?
I think one reason that will play out for most of these companies, like we discussed earlier, that the last year you'll have a higher base actually that you are addressing. So even if this month was good enough, it didn't have the combined effect of Navratri and Diwali.
Okay.
So that could be one reason. But why M&M in particular, that we'll have to probably wait and talk to some analysts.
Yeah, that's true. We'll wait and talk to those analysts as well. Okay, just start wrapping up the markets in moments from now. Pradeep will, of course, join in at the pillar to talk about what really is the index doing at close. But just wondering, Navneet, I don't know if we managed to ask you if any stocks might fall in the F&O ban or move out of the ban.
Not into the ban. I was just checking Indiabulls real estate, which actually stays in the ban throughout the cities if you check. The stock's actually trading up. Yesterday's the total open interest as a percentage of market-wide position limit was almost 80. So there is some bit of shedding which is required here for the stock to come down, but I don't see that at least on the future side and neither on the option side. So let's see if in just last 2-3 minutes there is any sort of unwinding. A meager unwinding though has taken place on the option side, and let's see if that is enough for the stock to come out of the F&O band. Just this is the second last series that the stock will be in the F&O market for Indiabulls Real Estate. But let's wrap the market and head across to Pradeep. Pradeep, negative closing for the benchmark indices.
Yeah, and I don't think traders would like the closing level on Nifty 10,338 because yesterday also we kind of drifted down from day's high, and today again, if you look at it, we failed to sustain at higher levels. Well, Nifty Bank is relatively better, 25,037, I guess. Axis Bank has a large contribution there. If you look at mid cap and small cap, though, relatively better than the large caps, and final number is roughly 0.5% gain on mid cap and small cap, which is probably not bad. Let's look at some of the heavyweights that really contributed to this movement. Well, on the top, you have Axis Bank for sure. You also have some heavyweights like ONGC, HUL, Bharati, also Maruti, Hero Moto. So auto stocks have been doing well ahead of the monthly sales data that will be released tomorrow. Well, HDFC, ICICI Bank, these heavyweight banks have actually not done well. Surprisingly, Nifty Bank is actually in positive. Well, if you look at some of the key losers, you'll have Tata Motors, Tata Steel, M&M. So there are some auto losers, the top losers as well, and also Infosys, in fact, is the top loser now as we close the day.
It remained a stock-specific day for the markets. We did see the benchmark saw some sort of profit booking, but let me highlight a couple of individual stocks for you. Capital First came out with its earnings, good set of number. The bottom line growth was pretty healthy of almost 35%. The stock surged post the numbers came about, and as you can see in the second half, just when the numbers came about, the stock saw that jump up coming about. So finally closing with gains of almost 5%. The Realty pack was quite active, and your top gainer in the Nifty Realty Index today was DLF. What a day of trade it was for DLF, up almost 7%. And from the small cap space, you also had stocks like 8K Miles and Kitty Industries. Both these stocks saw healthy gains coming about. 8K Miles closing with gains of almost 17%, and Kitty Industries also saw strong gains, almost up 14% towards the end. PNC Infra was the other stock which in the second half of the trade saw strong gains. As you can see on your screen, just in the last half an hour of trade, the stock surged and finally closing with gains of 11%. Reacting to its numbers, Bharat Electronics was up, and also Dabur came out with its earnings today. Better than expected volume growth and also good operating performance. These two factors saw the stock actually closing the day in the green. And besides that, KPIT Tech was the other one from the technology pack, which had a good day of trade. And you also had stocks like Bhushan Steel that didn't have a great day. Bhushan Steel saw cuts of actually the stock closed almost at day's low, as you can see it on your screen. Over to you guys.
Thanks for that, Navneet. But let's get in the management of Escorts really to talk about how the numbers could look like, or how the numbers have been, and what the outlook ahead could be for Escorts. Mr. Bharat Madan, who is the Group Financial Controller at Escorts, joins us right now on the show. Good evening, Mr. Madan. Thanks so much for joining in. I have to admit, irrespective of what the stock has done, that the quarter has been rather good for you. Both the revenues 26% higher, better than what you did in quarter one, obviously, so which was 11% growth. But the operational performance has been rather spectacular. What's led to this?
I think one of the key reasons, like you mentioned, was the operating leverage with the higher volumes. I think the highest ever volume I think we ever done in the company in a quarter. So that's one of the key reasons, besides the cost initiative that the company has undertaken. So I think both the factors combined had this impact, which is very positive for this quarter results.
Is in your hands, Mr. Madan, is of course the cost control initiatives that you would have. I think revenues would be a factor of how this quarter goes by. My question to you would be, what you've done in this quarter gone by, is this something that you can reenact? Would the GST, would the demonetization base and the extension of the festive season, or the spilling over of the festive season into October, work in the OND quarter as well?
I think it depends on how the...
Oops, I think we've just lost Mr. Bharat Madan. We're going, of course, try him again. But yeah, this is one conversation that we can't miss, really. Interesting. He's talking about both the revenue run rate moving up and the fact that they've initiated cost control leading to this big surge. For the benefit of our viewers who are tuning in right now, while the stock has done what it has done, here are the numbers. Revenues up 26% at 1212 crores. EBITDA up 109% at 141 crores. And net profit up 149% at 77 crores, with the margins coming in at 11.6%. So it's a big jump both on the revenue profit as well as the EBITDA front. We'll wait and watch as to what they have to say for the quarters ahead, Scots.
I remember, Neeraj, you spotted the stock yesterday when it touched its all-time high levels. It was up almost 5%, and I think what one saw today was a bit of profit booking. In fact, today also it did touch its fresh highs, but post that there was some sort of profit booking which came about. Though the numbers look really good, very good operating performance that one has to see. I think if we connect back, we'll definitely check what was the volume growth in the tractor side. That's going to be a very important number for Escorts.
Also, this note says, I mean, they witnessed a decline. Okay, we do have Mr. Madan, so we'll talk about our thoughts in a bit. But Mr. Madan, sorry, you were just beginning to answer about whether what you've done in quarter 2 could be reenacted of sorts in quarter 3 because of a low base as well, I presume.
Yeah, so I think one of the key reason is obviously the performance of the industry behaves in Q3 will, I think, depend a lot really in terms of getting those operating leverages back in the performance. But having said that, I think one of the key, issue which I think has not been highlighted so far is, I think in this quarter in Q2, we have also taken a one-time effect of about 26 crore, which is the GST transition impact on the stock lying with the manufacturers as well as with our channel. So that's one of the other reason I think which has impacted the performance in Q2, in spite of giving the very best performance in the numbers. Still, there's some impact which has been built in. So I think going forward, those impacts will not be there. So even if the volumes really do not happen the way I think we expected this Q2 volumes to really go through. So still, I think the performance wise, I think we should be able to deliver a good set of numbers going.
Yeah, for sure. No, I mean, even with that impact, I mean, if the numbers are looking so good, then I'm sure it would have looked even better without it. Couple of thoughts. I'm sure Navneet and Pradeep have questions, but I just have one small question really. Your market share in domestic tractors, I think due to deferrals of sales due to GST in the last quarter had dipped a little bit. What is your current market share, and would you presume it will go up in the times to come?
So in the first quarter, we had a dip, like you mentioned, about because of GST and the sales deferrals. We ended up with about 9.7% market share in first quarter. But in this quarter, we've been able to up it by about 1%. So now it's 10.7% as we speak today.
Mr. Madan, if you could give us exact numbers, what was the volume growth on the tractor side?
So tractor volumes have gone up by about 30% in this quarter.
Okay.
So that's one of the reasons. And on the construction side, again, I think we had a 34% growth in the volumes. So I think both the sectors have done well. And same way in railway segment also, we're seeing a pretty good growth rate this time. And the margin expansion has been pretty good in railway. And we're sitting on a very strong order book again on the railway side.
I was just coming to the railway equipment side. I can see the EBIT has seen a sharp jump, in fact, for this quarter. I know this doesn't contribute a lot to your bottom line, but still 12 crore versus 6 crore, which was seen in the first quarter. Any specific reason, or these are just the new orders that you're executing?
I think the first quarter was an exception because we have been in the normal EBIT margin range of about 13-14% in the railway business. But the first quarter, we had a very adverse product mix. That's the reason in the first quarter we had a very low margin. But now we are back with the same order book. The mix has actually improved. We've got a very strong order book now. And we expect going forward we should be continue to be in the same 15, 16, 17% sort of EBIT margin in this business.
Mr. Madan, if you could tell us whether the sales momentum has really sustained in the month of October.
So October obviously is expected there will be some slowdown because we don't expect the industry to really show a similar performance because September there are a lot of stock building which happened in anticipation of a good Diwali season. But now in October compared to last year where both the festivals were actually in the same month. So we don't expect the retails will be as strong as in last year. So you may more or less a flattish industry or maybe some slight degrowth in October. But having said that, in November, December, last year we had demonetization impact which had impacted the retail sales, so that should get made up. So overall, probably still look at maybe it's a flat quarter or maybe somewhere anywhere between plus minus 5% here and there, and that's a growth. But Q4 can be again a strong growth back in the numbers.
Okay, just one quick question. You consistently been improving your construction equipment EBIT margins to negative 2.1 last quarter. I presume it is positive this time around. Is this a trajectory that would continue, and any thoughts on where it could reach to over the course of the next maybe 4 odd quarters or 6 odd quarters?
So we had given a guidance earlier on construction side that in H2 we should be able to break even or make some positive margin. But this time I think we've been able to do it in the Q2 itself. So definitely H2 is a better season month for the construction equipment business, and we expect the volumes to be even higher compared to what we have done in the H1, and the margins will also improve. So I think in the next 4 to 6 quarters, our expectation is the margins will become positive. It will be anywhere between the range of 3 to 4% solid EBIT. So it will not be very high. But I think still looking at the past what we had in this business, so which we've been able to turn it around now. So it should remain in black.
Okay. So my last question, sir, maybe other two, my fellow colleagues have maybe a question or two more. But if I understood you correctly, maybe October could be a slightly tough month for the tractor industry at large. But would the low base in November and December make up for that? Would we see a comfortable October, November, December quarter from where you are sitting right now? Can you foresee that?
Yeah, so like you said, in October, shortfall can get made up in November and December. But overall for the quarter, we don't expect to see very sharp growth rate what we have seen in the first 6 months of this year. So at best, it can be a flat quarter in terms of growth, or maybe plus minus 5% here and there. But Q4 again can be a very strong growth quarter with about anywhere between 15% sort of growth, which is possible in Q4. So overall for the full year for the tractor industry, we still expect I think it will deliver somewhere between 12 to 14% growth on a full year basis.
Right. Mr. Madan, so far it's been a great financial year for you. Last year in FY17, you clocked overall profit of 160 crore. If I look at the first half, you've already done 140 crores. What are the numbers that you're working with the second half of this year then?
Well, I can't disclose the numbers, but obviously the internal targets are steep. So definitely, if you've seen the 6 months performance, and we expect, I think, if we're able to repeat the similar numbers probably for next year, for the next 6 months. So that's the target I think we're working on. And a lot will again depend upon the industry, how the industry behaves. If we're able to get those sort of volumes to be achieved in H1, so definitely I think our operating leverage will play.
Shareholders are certainly very happy, Mr. Madan. You've been doing a fabulous job. Thanks so much for taking the time out. Congratulations. And keep up the good work, and thanks for speaking to Bloomberg Quint.
Thanks a lot. Thanks.
Well, that's Bharat Madan of Escorts, and pretty candid. I thought, amongst other things, pretty candid. Didn't riff-raff around the fact that, oh, we'll see what will happen in O&D. He was quite candid to mention that October might be a bit soft, and while November and December will have a low base effect, it's not that it will set the stage on fire. Avinash, what did you make of the conversation? And what should one do if you either have the stock or if you want to buy the stock?
No, I think Neeraj, clearly, since he's clearly mentioned that October, November, December could be a slightly flattish kind of quarter, my sense is I think the markets are penciling a 13-14% annual growth, and on a 1 year quarter basis, I don't think this stock is going to be derated. In terms of the operating leverage, he clearly mentioned that the benefits have flowed in this quarter, and I would believe that the markets would obviously consider the fact that if the third quarter is more or less flattish in terms of numbers, at least the fourth quarter would make up for that flattish performance. So I would believe that any decline, if it does come, should be used as an opportunity to buy the stock. I think clearly we could be seeing better numbers even in FY19. This company has definitely a lot of capacity which it currently has not utilized, and probably we could see the full utilization happening in FY19. So I think good going, at least for the next 12 months.
All right, so that's the view coming in on Escorts. A good quarter for the company, and the stock was also trading at its lifetime highs, though there was some bit of profit booking which came in today. Let's switch focus and talk about the European markets. It's been a positive start actually for the European market indices. Bree Taylor joins us from the London studio with all the equity action there. Hi, Bree.
Hi, that's right. So as you just said, equities here in Europe are trading up, but just to note that Germany's equity markets are closed today. The stock 600 is being led higher by oil and gas companies, and we continue to be in the midst of earnings season here in Europe. The energy giant BP, those shares are up around 3% after it signaled growing confidence that the oil industry's downturn is coming to an end. So it's started buying back shares. Third quarter profit beat estimates as production and cash flow jumped, and the French bank BNP Paribas released its third quarter results. BNP's income from trading bonds, currencies, and commodities fell 26% to 801 million euros from a year earlier. BNP shares are falling, down around 3% this morning. And lastly, we've just had some data out. We've had euro area inflation. It unexpectedly slowed in October despite the bloc's strengthening economy. Price growth cooled from 1.5% to 1.4%, and that's what we are watching here in Europe. Back to you.
Thanks, Pri, for getting us all the action from the European markets. Well, let's move on and talk about the proposed merger between IDFC Group and Shriram Group, which has actually been called off. Nearly 4 months after discussions were initiated, IDFC yesterday said the exclusive negotiations were terminated. Ira Dugal caught up with R. Tyangarajan, chairman of Shriram Group, and he said valuation was not the only stumbling block for this deal. Listen in to that conversation.
Normally, deals take their own time to go through. What we have said is this will not go through within the time frame that we thought. Now, we didn't think. Okay, initially some exclusivity period was agreed upon. And exclusivity period means during that period we don't talk to anybody else, that's all. Now that the exclusivity, within the exclusivity period, if a deal has to be struck, that would have been a very unusual and a very improbable event. No deal of this kind of an wide-ranging complexity can be completed in 2 to 3 months' time. But somehow an impression was created that everybody is attempting to complete a deal within 2 months or 3 months. It wouldn't have happened. So there is nothing surprising to me, at least to me it is not surprising that we did not complete a deal within those 2-3 months' time. So it doesn't mean that a deal will not take place at some point of time in future. It can take place.
So you're suggesting, Mr. Tyagarajan, that the deal is not entirely off the table?
The point is, even the next 8 days or 10 days, we do not see the possibility of reaching agreement on a wide range of issues, not only the valuation. See, any deal, any working together between two entities, one of which has a 50,000 employee strength, there are so many details which have to be agreed upon. One is the valuation. The second is the objective that we have. We have to have agreement on the objective which we hope to achieve by working together.
All right, let's just mark those important numbers which are flashing there on your screen. JSW Steel has come out with its earnings. The net profit for the quarter has come in at 840 crore versus Bloomberg estimate of 1,032. Clearly, the numbers so far look below what the street was estimating. In fact, we'll just get you the net sales figure. Our poll was throwing about 15,953, and I've just got the release. The total revenue from operations has come in at 16,818. So it looks like the top line figure has been in line with the poll was throwing about, but it's the bottom line which has missed the street estimates. In fact, the finance cost for the quarter has just been stable. 950 crore is the number, and you've got the power and fuel expenses which are keenly watched out in such earnings. They have increased marginally to 1,396. Actually, on year-on-year basis, they have definitely gone up, but sequentially, it's just a marginal increase. Other expenses for the quarter were at about 2,072, a marginal increase again. But overall, we'll just get you the EBITDA margins. Those will be the important key metrics to be watched out in such numbers. The PAT has definitely missed the street estimates.
Yeah, that's certainly looking to be the case. By the way, Interglobe Aviation is out as well. The revenue numbers certainly look better than what the street was working with. Remember, they had a slightly soft month of September, but by and large, the Indigo numbers look okay. The screen is showing both JSW as well as Interglobe Aviation, but Navini, having dissected JSW, I'm looking at Indigo. Wow, this seems to be a blockbuster quarter. Clearly showing both in terms of revenue, which is better than the estimates that we had, but more importantly, the bottom line. Now, you would argue that for Interglobe Aviation, the crude impact would have played out as well, but I don't think it is just crude. It will probably be some other cost measures as well that they have pulled in. I think that's been the trend in India Inc. in quarter 2, companies have exercised extreme cost controls, and that's resulted in the operational metrics looking very, very strong. But this should get Interglobe Aviation as a stock, expensive as it may be, excited. At least that's the initial view that I have. I don't know if there are some other numbers that may come out. Navneet, anything else that you're spotting?
Just looking
this
at
is JSW
just
or
the breakup. No, just the breakup of JSW Steel. The total saleable steel figures, it's gone up 4% on year-on-year. It's come in at about 3.92 million ton, and the operating EBITDA for the quarter has come in at 3,036 crore, which is up almost 4%. And the company has also said, in terms of consolidated performance, it's the highest ever quarterly saleable steel sales, which I just mentioned, is up 4%. So 3.96. Let's not forget the steel prices, the domestic steel prices were definitely inching higher in the last few months. So, but that's not actually trickled down in the bottom line. So let's see. The crude steel production during the quarter, as the company has clearly said, has risen, was impacted also because of continued water shortage in south, particularly in Tamil Nadu, as well as availability of iron ore at Vijayanagar. Seems to be a concern for the company.
Well, there is a statement from Indigo saying credit received from Pratt Airbus also boosted profit. So we'll have to look for these details, because on all parameters the numbers are really good. There are some more statements like the third quarter capacity is likely to rise by 14%, and the total overall FY18 capacity rise of 19% is what they have projected. Also on second quarter yields, it has moved up by roughly 9% or 8.9% to be precise. So there are...
No, please, sorry. Please continue.
Yes, all these could have been the contributors, as we can clearly see. And there is, I think, forward-looking statement which also looks quite optimistic.
Okay, guys, now here's the good news. Interglobe Aviation, the EBITDA margins are at 33% versus 23% on a YOY basis. It's a big jump. So on a revenue move of 13%, which is anyways above estimates, with the EBITDA margin jump that they've shown, Interglobe Aviation's net profit has gone up 3x to 552 versus 140. That's just an extremely strong quarter from Interglobe Aviation. Both Somit and Nikki would be joining us in just moments from now to dissect these numbers. They are respective analysts who track this space, but suffice to say, I mean, I would be really surprised if Interglobe Aviation doesn't have a reaction in tomorrow's session to its numbers. JSW, I don't know, but it's a mixed bag, Navneet and Pradeep, if you will, or
so far it looks like a mixed bag, but the volume numbers were definitely good. I just feel the bottom line has missed the street estimates. Otherwise, the numbers are just looking okay.
So okay set of numbers for JSW, but Interglobe Aviation should certainly have a good move, and this should keep the aviation space in focus in tomorrow's session as well. Remember, yesterday Jet Airways was a big mover. SpiceJet today moved up a little bit. Let's see if Indigo's results enthuse the street enough, because part of the margin expansion could well be management control, but I believe crude would have a big part to play here as well. Somit is here with some details if he has some. Somit, very good numbers. The revenue numbers also, I believe, slightly higher than what the Bloomberg estimates were.
Yeah, it was a beat on all fronts. Now revenue rose around 37% to 5,291 crore. The bigger beat came in on the net profit side, where it rose 4 times compared to corresponding quarter last year, and the number came at around 552 crore. Now this was on the back of higher passenger growth. Passenger growth during the quarter remained around 13 to 14%. Also, rupee was stronger by 4% in this quarter compared to the corresponding quarter last year, and also the fuel expenses in this quarter as a percentage of total revenue stood at around 31% compared to 37% in the corresponding quarter last year. So these were the reasons which led to this outperformance for Indigo in this quarter. Also, the EBITDA for this quarter came in at 1,557 crore, which was up 61% compared to corresponding quarter last year, while the EBITDA margin came in at 33% compared to 23% in the last year. So broad and broad, it was a outperformance and a beat on all fronts when it compares to Indigo's result.
What a superb quarter. And I think, yeah, the fuel expenses rose only 6% if I'm not wrong. Is that what the statement says, versus the sales going up 13%. So good one for Interglobe Aviation. Nikki should be joining us any moment from now to talk about the JSW numbers as well. But yeah, I think we've kind of summarized what the numbers look like, but a decent quarter for Indigo for sure. Anyways, moving on. Capital alone is not the reason for investors to stay away from public sector banks, says Ramdev Agrawal. One of the biggest market voices in India spoke to us earlier on our ongoing series, How to Invest. And he said that a lot would have to do with lenders not following proper underwriting practices as well. Listen in.
The parameter which is not having capital, that is sorted out. That will be sorted out if that's what they do. But I don't think it is only about the capital. It's also about the management. It's about the HR practices. It's about the competition. See, 10 years back, private sector was very small. Today, look at resources of HDFC, ICICI, Axis, and all the banks you have given permission to. So you have to compete against them. So you cannot have, in fact, you should have a better policy. Now, all the public sector banks, they have the fantastic brand equity and faith of the people, customers.
Yes.
Customers, they identify with them. They have grown with them. Businesses have taken their money, developmental money, and they have grown with them. So they are loyal to them. It's not only about services. It's about loyalty. I would always go to the bank which has given me the first crore or something like that. Okay, so they have a lot of loyalty and a lot of goodwill behind. The issue is that to run the, you have to have underwriting. There are a lot of crooks in the system also. They will go and again take the money. How do you avoid bad loans?
Got it.
The banking goes down. I learned it in 90s, sometime in 90s, way back, 15 years back, in one of the Q&A sessions in Berkshire Hathaway. And the manager said, the only way banks go down, only way, there is no second way. You can keep spending your way. You cannot go down in banks. The only way banks go down is because of bad underwriting. If they set in one single parameter, if government can find a way, or some commission or committee, PGNI committee or somebody can find a way, and they install that there is no bad underwriting in banks, whether you are PSU bank or private sector bank, if you do bad underwriting, you will go down. If you do good underwriting, you will just go through the sky.
Okay, interesting.
You see, the problems are all bad underwriting.
And you can watch the entire show at 10 p.m. tonight. But let's focus back on earnings. JSW Steel came out with the numbers. It was a miss on the bottom line, but an all-important number will be EBITDA per ton. Let's go across to Nikki Merchandani to find out how the EBITDA per ton panned out for the quarter. Nikki?
Navneet, we will first have to look into the volume numbers for that. If I'm just supposed to quickly run you through the numbers, then in terms of net sales, if you look at it, that's almost a beat there, coming at 1,618 crore as compared to the estimates of 1,593 crore. However, this time around, another company has disappointed the street from the face of it in terms of the operational performance. EBITDA has come at 3,036 odd crore. We were working with a number of close to 3,200 odd crore, so that looks like a miss out there. The margins have also come in, they've contracted at 18.5% as compared to 22.17%. Now remember, we were working with a margin of roughly 20.30 out there, and if you look at the PAT figures on consolidated basis, they've come in at nearly 836 crore as compared to 647 crore in the corresponding quarter of the previous year. So prima facie, on the face of it, it just looks like it's a miss on the operational front. The same theory also worked well with Tata Steel, and then we'll have to again work out to understand the details of what has led to the operational miss for this company.
That's interesting. Let's see if there's a trend that is building up in steel companies this quarter. Nikki, thanks a lot for putting all of that into perspective. Before we wrap though, let's take a quick look at how the commodity markets are faring too, since we're talking about commodity numbers. But nothing too dramatic, I would presume, Pradeep. Maybe the markets could be quiet ahead of the currency markets could be quiet ahead of the two key central bank meetings. But what about commodities?
Same here, because if you look at crude, 54.15 on Brent, on WTI, and also on Brent is 60.8. So there is not much change since the numbers that we saw in the morning. If you look at gold, is 1275. It's stuck at around 1275 for a few days now. I think maybe there will be a move only after all these central bank meetings are behind us. If you look at base metal, aluminium, copper, nothing is really happening. So I think commodity markets are clearly waiting for a cue from either from the currency side or from something coming straight from the central bankers.
All right, I guess with that, we'll wrap it up here on this edition of Countdown. Thanks very much for watching the show, but don't go anywhere. You've got What Did You Miss coming up next.